This is Sarah Schaefer, Business and Crop Online Editor for AgWeb.com, and I'm visiting with Sue Martin of Ag and Investment Services at the 2009 Marketing Rally. Now, Sue, you presented yesterday and you talked a lot about timing as part of your marketing strategy. Could you explain that a little bit for us?
Well, I feel like there's that old saying, at the right place at the right time. And sometimes we all get caught up with a price, and sometimes people just get caught up. They think the market has to be at a certain price or they're not going to sell. And one fallacy they tend to do or mistake they make is that they always think in even dollars. Like, I'm going to sell at $10 when it probably should be $10.01 or $9.98 3/4 or something like that. But I find that timing in the market takes away some of the emotion. And I've also found that there are various ways of timing a market. But for me, I tend to like windows, what we call timing windows. And those are dates that are specific throughout the year where we find, and they're not always the same dates, but for an example, we're looking for a high in beans and corn on January 13th, 15th, and 16th. And of course, that should be ushering in what we call the traditional seasonal, the February break. And of course, farmers this year have a poor quality crop of corn, so they're going to have to move it. It isn't going to store well, and it's expected that a lot of corn will move January, February, and March. So that's probably going to help accentuate the February break. In the meantime, Brazil is going to start to come on deck as we get into late January, February, and of course, probably more so February and March. But the trade is going to be ahead of them because they're futuristic. So they're going to look ahead and jump in and probably start top picking sometime in January. And I believe it'll be around the 13th, 15th, and 16th. So people will have a chance to kind of look at it and say, okay, how good is this date?
Well, looking forward at next year, do you think there will be more corn planted or more soybeans planted, or who will win this acreage battle of next year?
Well, it's going to be rather interesting because I believe that I think we're going to have more corn acres, but you've got some corn coming in out of CRP. I think it's just shy of 3 million acres, and that'll probably go to corn. You've got, but it won't produce well. And in the meantime, you're also going to have, we have less soft red wheat acres planted, so that's acres that'll probably go back in towards corn. And then I think that the other thing we've got to remember is the vomitoxin. The areas that have had vomitoxin, that doesn't come out of your soil very easily. But in the meantime, there was white mold in beans, and that lays in the soil. So you're going to have some shifts in acreage because of disease created it. But I think, to be honest with you, the one crop that probably catches everyone off guard, and it maybe isn't going to be right away, but the wheat market next year is going to have to vie for acreage. And I think that the marketplace, while we have burdensome supplies of stocks right now, and our stocks to usage ratios are hitting historical highs and maybe even making new highs, I think the marketplace, because of production around the world, looks like it's going to slip backwards this coming year. I think as we go into 2010-11, the wheat producer is going to be enticed by price to probably go in and plant more wheat. And it may be such a thing that it's with corn prices not looking as good as we'd like them to, or something like that. It doesn't necessarily have to be a price market going up, definitely for wheat, as opposed to a change in the spreads. It's all about money. But the one thing that I would recommend to producers, because they get caught up in price and they get so stuck on a price, they sometimes forget to look at and add up what their costs were for, input costs, and then turn around and reduce that out away and figure out what is their bottom return at the end of the day. What is that return? How much does that dollar up to? I think that if they would do that, they would be amazed at how much money they're making, and it would help them make those sales a little bit easier.
Well, as a market advisor, what is the number one market moving factor that you're watching for the next few months and next year?
Well, for the next few months, I think the thing that we're watching closely, of course, is the shift in demand with Brazil. Because, on January, or I should say the beginning of our new marketing year, September 1, world stocks, even with a record U.S. crop of beans, world stocks fell 2.4 million metric tons from a year ago. And the reason it did is because we'd gone through 2 years back to back of poor production out of South America. So we didn't have that competition. And then, so that drew down with that and the combination of good demand for soybeans and for veg oil, that type of thing. We didn't get a chance to really discuss in depth some of that in my meeting in the last one, but the problem is that we're going to be crushing this year for the oil content, and the beans in the U.S. are said to be down a little bit in oil content and higher in protein. So as we crush more beans to get the oil, the veg oil, what we're going to find is that we're going to accumulate a lot of soybean meal. And that's going to be something that maybe beans love to rally or